Good afternoon, Hong Kong. How is everybody doing? Enjoying the conference? Yes? Oh, come on, wake up. Let me hear some more claps. It is truly an honor to speak here today, not just in the APAC region, but specifically Hong Kong, and to bring some of our members from the Bitcoin for Corporations Alliance up here, joined here by Strive, Kraken, and the Smarter Web Co. These guys are the pioneers shaping the corporate Bitcoin Treasury adoption playbook, and I'm very happy to have this discussion today with them. But I'm going to let these gentlemen introduce themselves. Andrew, why don't we start with you?
My name's Andrew Webley. I'm the CEO of the Smarter Web Company, and we're the UK's largest public company holding Bitcoin on the balance sheet.
Hi, my name is Gurpreet Oberoi. I'm the head of Kraken Institutional.
Matt Cole, CEO of Strive. We are completing our reverse merger right now. If anyone happens to own shares of ASST, vote yes.
That is a great call to action, Matt. Why don't we give a little bit more context behind what the Smarter Web Co. is doing in the UK, Andrew, and then Gurpreet from Kraken Institutional side, how you guys are supporting these companies, and then Matt, of course, from the US angle. Andrew, let's start with you.
Yeah, thank you. So I started my career in 1999, which was the early days of the internet. I worked at a small company that became a very big company, one of the biggest companies in the UK. Then I set up my own small technology business. I found Bitcoin about just under 10 years ago. And after seeing what Michael Saylor did with strategy, I felt that the UK should have its own version of strategy. So I listed my business on the stock market. We IPO'd in April this year, approximately 4 months ago. We've become a fairly large company now after raising approximately £200 million of capital. And in line with my personal beliefs, we hold our assets in Bitcoin, and we hold it with the idea that we grow it by increasing the Bitcoin yield that we can achieve.
Yeah, Kraken has been very instrumental in the digital asset treasury strategies. We help custody, provide trading solutions, and also credit. I think a differentiator is, if somebody custodies a Kraken and say they want to borrow 10, 20, 30 million against their custody assets, we can structure bespoke solutions to the treasury solutions. And we can also help think through ways to help differentiate themselves amongst others.
Yeah, so for me, my background's fixed income. I used to run a $70 billion bond portfolio at the largest pension in America called CalPERS. And I had a direct line of access to the Federal Reserve, the US Treasury, and I saw them gaslight me in trying to tell me that they weren't printing money. And it's this simple, that the only reason that technically what they said was true is that the Treasury would create new bonds, they would sell them to Goldman Sachs, and then Goldman Sachs would sell them to the Fed. If you take Goldman Sachs out of the equation, it was direct monetization of debt. And it was so obvious. And this was before I was a Bitcoiner, but it led me to put pretty much my entire net worth into Bitcoin late 2016, early 2017. And when I joined Strive in 2022, which was co-founded by Vivek Ramaswamy, principled on financial freedom, it was obvious for us to go into Bitcoin. In talking to Michael Saylor, initially it was not as a Bitcoin treasury company, and Michael Saylor was pretty blunt and just said, why aren't you just a Bitcoin treasury company? And like, yeah, that makes sense. Bitcoin's the hurdle rate. And so we adopted Bitcoin as the hurdle rate, which means that if we are going to put money to work, if when we're putting that money to work, we don't think it's going to beat the future return of Bitcoin, 30%, 40%, 50% a year, then why aren't you just buying Bitcoin? And so for us as a Bitcoin treasury company, we are looking for ways to grow Bitcoin per share, the amount of Bitcoin each share of our company owns, which is like other Bitcoin treasury companies. And we're all approaching it from a little bit different angles. But just to give you a sense, I mean, I don't even think we've scratched the surface of the innovation that can happen in this space. And I don't think people understand the risks. And the risks are substantially less when you actually dig a little bit deeper in the debt that these companies are taking and the future returns. I think strategy is literally a triple A rated issuer of debt, but yet they can't even get rated. That's how early we are.
So we're all Bitcoiners up here. Matt, I think you brought up a lot of great points that were at the very beginning. I mean, there's about, 300 companies that hold Bitcoin on the balance sheet, and maybe, 20 of them are running the Bitcoin accretive play. And it's very fascinating to see how everyone's coming to this realization that, like, hey, traditional instruments like Treasury bonds are just not the place to park your excess cash reserves. And so we get into the main topic of our panel today is how do you actually value these Bitcoin treasury companies, right? And I think there's two main buckets to look at. First is the tangible, so the Bitcoin per share metric that you talked about. And you also hear people bring up MNAV, BTC torque, BTC yield, and some of these other things. And it's another language maybe to the retail side of stuff. But even for traditional financial professionals coming in, I think it's important to set the baseline for what these KPIs are. So Andrew, I want to throw it to you. When you look at Bitcoin treasury companies, what are the core KPIs investors should focus on? Is it Bitcoin per share? Is it MNAV? Is it BTC yield? And what do your investors and shareholders seem to care about the most at the end of the day?
So this could be a very long answer, but I'll try and keep it fairly brief. You can get as complicated as you wish, but what I would do is I would recommend that somebody looks at three things. So the first one is the MNAV, really easy to work out. You can find it online. Most Bitcoin treasury companies have an analytics dashboard that you can see. What the MNAV means is very, very simply, it's the value of the Bitcoin versus the market cap. Maybe below 2's pretty low, below 3's relatively low, maybe above 5, 6, getting expensive. Not financial advice. So you've got your MNAV. Then the second thing that you've got is the BTC yield. So this is really important. So a company like my company will issue equity, which increases the shares in issue. In return for doing that, it will generate capital, which in our case gets deployed into Bitcoin. So we issue shares and we buy Bitcoin. So the growth in that Bitcoin held is the BTC yield. So you're calculating the growth in the BTC versus the dilution caused by issuing the equity, which is, in very, very simple terms, made possible when the MNAV is greater than 1. Then the third thing that is something that not a lot of people talk about is the size of the company. And very, very simply, the model is ever so slightly easier the smaller the company. So if you look at, say, the market cap of the company, one of the components of your MNAV calculation, you'll be able to see the size, with the theory there being, which isn't 100% true, that the larger you are, the harder it is to raise additional capital to make that much difference to your BTC yield and therefore MNAV.
Andrew, you and I were talking kind of earlier, and Matt, I'd like to get your perspective as well here too as CEO of Strive. We're talking about what's valuable to shareholders, but does that necessarily align with what's valuable to you as the CEO? Like, what are you guys looking at ultimately at the end of the day to value your own companies?
Yeah, so for us, we are on a mission to outperform Bitcoin over time. Because if you aren't doing that, there's no reason to do the strategy. You should just buy a Bitcoin ETF. And so for us, it was, how do we deploy our resources? We have a very talented team. There's a lot of talented teams in this space, right? But each team, like sports teams, have different strengths, different weaknesses. And we're an asset manager. And so as an asset manager, we're used to looking for alpha strategies, meaning can you outperform Bitcoin without even taking Bitcoin-specific risk? So that's the alpha side. But then on the beta side, I think the debt markets are evolving so quickly where when we announced our reverse merger in May, convertible notes were still the in way for people to get leverage, and now it's shifted to perpetual preferred equity instruments. And so we've kind of found ourselves in a position, I think, as probably the only Bitcoin treasury company that's doing a reverse merger, so as a SPAC, no debt, raised $750 million of capital. So that's become a very interesting opportunity for us to consider as we complete our merger. But that's how fast this space goes. When we were at Strategy World or the Bitcoin conference in America, that was not a thing. And so for us, it's just being nimble, having fun, putting our brains together to make the best decision. And that'll be different for us versus Andrew versus Nakamoto. But ultimately, I think we're in the early days of figuring out different ways to increase the amount of Bitcoin per share.
Gurpreet, as Kraken Institutional is at the front lines here with a lot of these companies who are running the Bitcoin Treasury playbook, you get to be beholden to a lot of these conversations. What's your take on all of this, and how is Kraken supporting these companies?
I think Kraken is a service provider, so we try to, even playing field. We offer custody solutions, trading solutions, and lending solutions. What I've seen that's working is traditionally, like when you buy a stock in public markets, retail, institutional, hedge funds buy a stock so the price can go up, right? So they can sell at a higher price. So I think the winners who I see in the Treasury companies today are guys that have really strong marketing strategies and hit velocity. They hit velocity very early on so they can hit the ATM and keep the flywheel going. So where Kraken helps is we provide customized lending solutions where we can lend them against their, if somebody raises $750 million in Bitcoin, they can borrow from us for 1 week before they hit the ATM and increase their NAV. So Kraken as a service provider can really provide to Treasury companies differentiated access to increase NAV and also like touch on tokenized stocks, MicroStrategy, NVIDIA. They can trade. They have global distribution from Kraken's X stocks. So I think from a service provider lens, I think we all these areas are each play a role in having a successful Treasury company.
So I want to start we talked about a lot of the tangible aspects here. I want to start getting into the intangible, right? It's been very fascinating to see over the course of the last 16 months the rise in the Bitcoin Treasury company narrative. And early on, you could say, hey, we're putting Bitcoin on the balance sheet, and it would do multiples of wonder for your stock performance. But I think, general sentiment has moved past that. Savvy investors are really looking at the leadership teams that are executing this playbook. And Matt, like you mentioned, Bitcoin is the hurdle rate. So you guys are looking at some of the financial engineering aspects to see how you can outperform Bitcoin as a whole, to bring more value back in. So when you're looking at financing moves like convertibles, like ATMs, or even debt, how does that ultimately impact shareholder value? When are they accretive? When are they destructive?
Yeah, so first off, on the debt side, if you have perpetual preferred equity instruments, so let's say you had 30% leverage ratio and you have that embedded for your company forever, you never have to pay back the principal. If Bitcoin grows at 30% CAGR every single year on average, and your cost of capital is 10%, that just works. It doesn't matter if your MNAV is 1, it doesn't matter if it's 0.9. As long as you can meet your interest obligations, you're good. And this kind of gets into where I think the industry is going to go, is that in traditional fixed income markets, you evaluate risk typically by interest coverage ratios. How can you take your profits and cover the interest, and how many times can you do that? And when you actually put into a risk model the returns of Bitcoin and you look at leverage ratios, you see it's pretty hard to break these companies. It's possible. You can break anything, but it's pretty hard, and I think that's one of the places where I think we have a pretty strong team, just given my fixed income background. Our CFO has investor relation and investment banking background. We have Jeff Walton, who has a reinsurance background. Traditional finance is a really strong place for us, and then you look at other companies. You look at Nakamoto, who's innovated in every single international market. That is unique and distinctive for them. It's super interesting. You look at MetaPlanet, what they've done in the ARBs in Japan. It's just like different teams have found different niches to provide value. And ultimately, like one of the things that Michael Saylor told us when we got into the space was the hardest thing for the new Bitcoin treasury companies is going to be, can you get to $1 billion? Because when you can get to $1 billion, you can finance great teams, and it's not a large cost relative to the amount of capital that you have. You're open to do things like IPOing perpetual preferred equity instruments. And so it really is a race, at least in the US markets, to get to scale. And we have a handful of companies that have done that. And then once you're there, then there's the differentiation comes in.
Andrew, from the UK side, would like to get your take on this, especially as, I mean, Smarter Webco has a very interesting, rise to fame here, starting out as a small cap pubco you guys IPO'd what, back in April, and to go instantly from a $3 million market cap to, I think it was, upwards of almost $1 billion, right? And then an MNAV at one point of 14x, which is crazy. People must have been thinking, like, what is Andrew doing? Is this reckless? But you're very smart, you're tactful, you're reserved. How are you analyzing risk on your end?
Yeah, so what we've done since the start is we've just stuck to our strategy. The most important thing that you can do as a public company, in my opinion, is to put the shareholders first. So since before we IPO'd to the IPO and every day thereafter, we've made every decision with them front and center. Clearly there is some risk if you invest in a Bitcoin treasury company. I have almost 100% exposure to Bitcoin and Bitcoin treasury companies, but I wouldn't be comfortable, or put another way, I would always do my best to communicate the risks. As an example, in the UK, we were the first company to clearly specify the risks in every single announcement that goes out. If somebody can understand the risks, then in our opinion, these things are the very best valued equities in the whole world. When we look at, the MNAVs, that a lot of them are trading in, in quite a few different locations, the period that they will earn back that Bitcoin for the investor is absurd when you compare it to traditional metrics like PE metrics. So that's all we do. We try and make every decision based on the investor. Ultimately, they are the people that own the company. They are the reason why I listed my business, because I wanted the business to invest that did it this way. And then we just try our best.
Gurpreet, you and I were chatting earlier about the importance of brand value and how that accelerates brand velocity. And Kraken's always been kind of at the forefront of that. What lessons can you kind of share with the crowd here, and maybe even Matt and Andrew, on the importance of that?
Yeah, Kraken is one of the biggest supporters for BitMiner, Tom Lee, and we believe that's probably, after MicroStrategy, the best executed treasury company. And what we learned is that velocity, knowing when to hit the ATM, and understanding lockups, right? For investors, like MNAV can be a fictitious number, right? Because if your shares are locked, your stock price rips when the product gets listed. So I think, understanding how to touch the ATMs, understanding capital markets, understanding structure is very, very important. So it goes back to, right, when you start off, you need velocity to hit the game, right? Like institutions, hedge funds, pensions, endowments, they'll not invest in the 10th Bitcoin strategy company. So I think figuring out how to be the top 5 is very important to be succeed in the long term.
Maybe just, a little bit of controversy is fun here. So I think that brand value is important, and you've seen that with Tom Lee's company, but I just have to call out, Ethereum makes for a horrible asset for a treasury company. And, oh my gosh, why?
Everybody, a round of applause here real quick. Come on.
Because Bitcoin perpetually goes up versus fiat currencies because they're being debased. Ethereum is like a company. And a perpetual strategy as a treasury asset to buy Ethereum or Solana or Dogecoin or Pepe coin, I don't really care. It's building a house on sand. And so the brand can accumulate the coin quickly. It can make the coin go up. But ultimately, Tom better start buying some Bitcoin, or I think his days are numbered.
Kraken's a service provider, so no comment. We support everybody.
So, gentlemen, we're coming up here on time. 30 seconds, final take. How do you value a Bitcoin treasury company? Andrew, final words.
So look at the MNAV, look at the yield, and then look at the size of it. Remember the three things that I said, and then just do your research further after that.
I mean, Kraken's a service provider. You know, we want strong teams. We're long Bitcoin. We support everybody that's in the ecosystem. So we'll, you know, through our platform, we'll back everybody.
Tom's a smart guy. I followed him for years. I like him. I just don't like Ethereum as a treasury asset, but I agree. I think it's great you guys provide the service for everyone.
Gentlemen, I appreciate the time. We're at time here. Thank you very much. And Hong Kong, thank you. We'll see you later tonight.